Happy 2024, May 31st, final day of May, going into the hot summer season. Welcome to all our VIPs in the gallery. Some awesome professionals in there. Welcome to the Surgecast, our weekly podcast. And today's topic is going to be finance mastery. Basically, how do you use what product with what project? How do you match them? And so today we're going to do a primer on that, and we're going to start inviting our partners who are on Surge to come and do their own deep dive for you. Okay. Hope that works. And again, welcome and a special introduction to Ali, who is our founder and CEO. This is her third company. And I think just one of the coolest things in the world to adopt more commercial projects across the US. Right? I mean, you think about platforms out there like Airbnb or EXP, you think about platforms like Amazon, where the multiplication factor of adoption really changed the history of those industries. We're looking at the same thing here in commercial. And one of the cool things about what we're doing here is we want to accelerate the speed of adoption, and we want to accelerate the education of this so that just like you could talk about a residential solar system, you could talk about a commercial solar system. So I'm going to take away all her thunder, but Ali, it's all yours, and then we'll go into the interview format.
Awesome. Yeah, I'm super excited for today's episode, Finance Mastery, because I've gotten a lot of questions lately about financing. I'm sure some of you in this room have actually asked me those questions, and it's a big topic. You know, people come to Surge and they say, okay, am I going to have financing options through Surge? How does that piece work? So it's something we definitely want to cover and provide for our projects. And it's a really important topic because it makes deals possible. And anything that we can do to make a deal possible, we're going to do. On that note, and other things that we've been doing to make things happen, celebrating Mike Laser and his new partnerships forming with some of the EPCs we've been bringing in. We brought on 3 new EPCs in the last couple of weeks. We have Symmetry out in the Bay Area of California. We have SunRenew in Arizona picking up Mike's deals. And then we also have Yellow Light based in Cleveland, Ohio. So a good spread there, West Coast, Midwest. We've got a number of EPCs on the East Coast already. It's definitely a hot spot for us. So continue to invite your EPCs to the platform. It's a huge opportunity for everyone. And really, as we see these deals come in, we're going out and we're looking for the right partners actively and really building up that network. So we appreciate all that you guys are doing, putting deals in, bringing in EPCs, bringing in your team members as well. Just want to shout out Rod for bringing his team on board and really getting started with Surge. We're excited about that. Huge progress and momentum.
Thank you.
You can see Rod build the team. You know the Rod I know. Watch out. Watch out. Awesome. We're blessed and honored, sir. Thank you. Yeah, that's right. Hey, Ali, when you think about the big differentiator with doing commercial directly with an EPC or using Surge, what is that one thing or that 1.5 or 2 things?
Yeah, great question. Well, as you mentioned, you know, really the speed, you know, the pace at which we can get these deals achieved is a lot faster when you have a platform in place. And, you know, we've talked about that before. We've talked about that at length, but our whole goal is to form those partnerships more quickly and shorten the sales cycle as well, because a lot of people hesitate to get into the commercial space simply because it's not as quick as resi. It's a much longer turnaround time. There's many more decisions to be made. There's a lot more that you have to work through in the process of actually closing the deal. But when you have a really strong EPC and you have a platform that facilitates the entire process, it makes a huge difference. And in addition to speed, I would say transparency, right? I think we've all been in a place before where we get burned by some bad relationship in business. And when there's a platform that's keeping everything, you know, at a bird's eye view, but also down to the nitty-gritty details where you can see exactly what's going on every step of the way. Everything's documented, time-stamped, signatures are present. You can see what's going on with your deals. I think that's huge. And that lack of transparency when things are just kind of, you know, you're winging it in a, you know, an external relationship can get a little bit stressful. So that's really what we're trying to provide here is trust, transparency, and speed to install, speed to PTO.
Right. And it's a platform, but you as a user group create the ecosystem. So we need your feedback, especially this VIP team, to tell us, hey, this is what we need to do to change process, protocol, or even the interface, right? You need to tell us if you need more EPCs here, or if you need more sellers here, if you're an EPC that's listening, right? So in the old day, the before was I would have to develop the project and have to find an EPC that wants it. That took time, right? Then I had to figure out how they want to finance it. So I had to put those people together, right? And then we had to go through the rest of the process, which becomes more linear. We want to do shorten that front part of the process and allow matchmaking to occur very, very quickly. Then get it to engineering, and then that's going to take on its own path, right? One of the cool things about having local EPCs and not big companies is they know how to navigate locally more than the bigger companies, at least from my experience. Okay, let's dig into finance mastery. All right, first question, ma'am.
Yeah, I'm excited to dig into this. So obviously, Emmett, you've been a leader in this industry in the solar and renewable energy space for almost 2 decades. So I'm curious, what trends have you seen in financing solar projects over the years?
Sure. Back in the day, it was really 2 or 3 types of financing. Right now, it's going to be about 5. So how would you divide those 5 in? It's categories. The first is going to be cash or self-financed. Okay, that's number 1. Number 2 is unsecured financing, typically through a third party. We've specialized in green tech. Now, either they're completely focused on green tech or they have a separate division with a whole group of people to support projects that you're requesting a quote for some kind of economic vehicle. Many times they partner, they customize that. The third bucket is PPAs and leases. This is third party owned. So this is where the customer basically changes utility providers, right? And they don't have to worry about maintenance or anything like that. They just have a lower utility bill. The fourth big bucket, this is really growing exponentially, especially in the Mid-Atlantic, is CPACE. That's Commercial Property Assessed Clean Energy. The fifth, and we're going to do really more of a deep dive on that one because I'm sure folks here are familiar with the first 3. So we're going to do a little bit of screen sharing on that one. And then the 5th category is kind of another, right? Crowdsourcing, grants, awards, pilots from certain manufacturers. Maybe they want to make you a project for a product that they're rolling out, that type of thing. So those 5, cash, self-financed, unsecured financing is number 2, PPAs, leases 3, and then CPACE is 4, with 5 being that special vehicle.
Love it. Love it. And can we go deeper on each one, really double click into each of those for a few minutes and, look at what are the details on each of those? Obviously, the first 3, like you said, most people are familiar with. I know we're going to dive deeper on CPACE, but just a little bit of detail around how these work.
Sure, sounds good. And while I'm going through it, please put your questions or comments in the chat. And as we round out each of these sections and toward the end, we're going to open it up for discussion. So let's talk about cash and self-financed first. What were the questions you wanted me to specifically ask there or answer?
Yeah, so why don't we define each one, just to start off with, define what each one is and how it works.
So cash basically is you have a treasure chest of cash that you hidden maybe somewhere, or you have a lot of money in a bank. We're typically multiple banks, right? A lot of companies, they have 2 or 3 banks, they compete, or maybe they're structured. One is to take care of payroll, right? One is to take care of corporate and overhead. The other one might be more in development or actually the operation of the service or the product that they provide. So when a company is at that level, then they have multiple banks and a credit line, right? They're going to go, hey, listen, just tell me what the cash price is, and we're going to go shop it to our banks. What they might also do is, can you go shop it to a unsecured bank so that I can compare what I can get outside, maybe at a 4th bank, right? So you can see how there's a little bit of a link there between cash and unsecured. In fact, that happens to me almost 80% of the time, right? So that's kind of the lay of the land there. Ali, follow-up questions?
So what types of commercial customers tend to adopt that method, cash or self-finance as opposed to any of the others?
Yeah, infrastructure type companies, anybody that's kind of in the construction business, anything that has to do with machinery. Um, those are the type of companies that typically have cash. Agriculture, huge. They typically have a lot of cash too. Multiple banks, and then of course, federal subsidies on the sales side. Things in the sports and recreation world. So a sports center, um, a rec center. I've done golf courses before, you name it, right? And this could also include parts of maybe a private school, their facilities, right? Um, Public, yeah, typically a little bit harder to do. And believe it or not, actually, one of my favorite cash deals was a laundromat. A laundromat in San Diego, almost $30,000 a month to the STG&E. And
Wow.
he had to treasure, he called it a war chest, not a treasure chest. And he goes, this is a total no-brainer. Boom, filled up the entire roof. Funny story about that is the Public Storage across the street saw him do it. We sold them next. Right? I want what he has.
Yeah.
I don't know if
Easy.
it's the largest laundromat ever done in solar history, but man, it was fun to do. Flat roof too, of course.
Nice.
And then he
That's
did a
awesome.
whole marketing campaign on your laundry's powered by solar. I guess it worked.
Yeah,
Very happy person.
that's
Does that
awesome.
help?
Yeah, absolutely. Absolutely. Great story as well.
Mhm.
What are the benefits? What are the benefits of doing a cash or self-finance deal? And also, what are the challenges that maybe come with going that route?
Yeah, so the benefits are pretty obvious. If you have cash in an account and it's only making a couple points for you a year, why wouldn't you, allocate some of that money to something that has a better return? It's also going to give you cash influx through your incentives, right? Um, so it's basically an asset reallocation. And the defining factor is going to be the IRR calculation, right? So you want to look at the rate of return and you just go, okay, this solar system 17 to 21%, right? And I'm looking at my other assets and that one's at 4. That one's at 8. My savings account's at 2.9 maybe, I don't know, right? And that's just a no-brainer, total no-brainer. Simple board decision, at least in my experience. Okay. Now, in
Absolutely.
terms of obstacles, it really is getting to the C level, right? So you got to work with your CFO, you got to work with your controller. You definitely need to work closely with your facility manager because it gets super complicated, but that's more on the design side. You definitely want to take a cash deal to the board as quickly as you can, right? Make the
Yeah.
CFO look good.
Hmm.
Yeah,
Makes
there's
sense.
an example of when we did one and the CFO got promoted to chief sustainability officer, right?
Wow.
So he created the case, and he'd already been there for 20 years, created the case of, we've got 9 other facilities, let's go do them.
Mm.
And they said, well, that sounds like a full-time job. You sure you still want to retire? And he's like, nope, no, I'm not going to retire. True story.
Fascinating. Wow. Chief Sustainability Officer. I think every company needs one of those these days.
Mm-hmm. Yep.
Really cool. Really cool. So any pro tip around how to do a cash deal, how to do a self-finance deal? Is there any insight that you can give our audience today on how to go about those?
Yeah, this is one where you have to work very closely with your EPC. If they've done it before, I'd say you make sure, number one, you're able to deliver to your EPC that C-level executive, right? You've done the needs analysis questions. We have some guides, and each EPC has their own kind of needs analysis process so that you can bring in the right one, and you can probably find that match on Surge. Yep. You want to
Awesome.
move on to the next one? Next
Yeah,
category? Good, good,
absolutely.
good. Keep me on track. So unsecured, right?
Yeah, yeah, let's define it.
Yes, unsecured is typically where you have a bank that focuses on either the green tech, the improvement, even retrofit work for companies and homeowners. I mean, sorry, business owners and buildings. Sometimes even bridges and things like that. Believe it or not, we're seeing that now too. These are smaller private companies, typically like Forbright. I'll show you a whole list of these companies when I screen share at the PACE discussion. But basically, it's going to be at whatever the prevailing interest rate is right now, for the most part. But the cool thing about this is that when you work with folks in these banks or divisions, like M&T Bank has a division that's just focused on green tech, they create a very customized product for you, at least in my experience, right? They sit down, they do needs analysis with you, the customer, they figure out, hey, what is the kind of vehicle you need? And then they put it together and say, okay, here you go. It takes a few iterations, but hey, it's definitely worth it.
Awesome. Awesome. And so what types of commercial customers go that route? You know, what type of industries are we looking at with unsecured financing through these banks?
Mostly smaller private sector industries. If you think about like professional service centers, you know, that type of thing, kind of the white collar side of the world, office buildings, satellite buildings, office parks. Typically, that's what we see in the unsecured world at that level, at least in my experience. Again, folks, if you have other experiences or you have questions as we go along the way, please drop them in chat.
Interesting. Yeah. And can we dive a little deeper as to why? I'm curious why.
In terms of what question?
Why are those types of businesses going to be attracted mostly to that unsecured financing? Is it a cash, you know, reserve issue? Is it,
Yeah,
you know, what they qualify
typically either it's a cash reserve issue because a lot of these businesses don't have piles of cash or assets they've invested on because they're more providing a service than they are producing a product, right? When you're producing a product or you have assets, you can put a lien against those assets or you already own that lien. The other part of it is it's usually cheaper than mezzanine, which also kind of is more complicated. It's easy, get approved, you know, create the custom product from the finance group.
Awesome. Awesome. Okay. And you obviously mentioned a few benefits here already, but what are the main benefits of going that route? And also what would the challenges be?
The main benefits is you're going to be pretty much zero down, which is really a cool thing for people to wrap their arms around. And, you know, by the time you get your incentives back, then you're in really good shape, right? And I think that's the thing that would be the pro tip is like make sure when you're going through the process, you talk about what are you going to do with those incentives? What happens when you start saving money, right, from your project? And then you get these 1 or 2 or 3 cash outlays, either from a write down that they can do for makers, or you can, you know, take those incentives, like maybe, you know, it's a grant or an award, or it's a tax incentive, state or federal.
Awesome.
Yep.
Yeah. Makes perfect sense to
Yeah,
me.
I did a 2 for 1 on that one, Ali. So I saved you a question.
Yeah, I appreciate that. You read my mind. Cool. Well, let's move on to the next one here. PPAs and leases, which I know are a little more complex. People often wonder how those work. So what's the definition of a PPA or a lease?
It's really a third party owned vehicle. I'm not going to get into the technical differences, but in a PPA, basically you're paying for what's produced, right? And in the lease, you're basically got a fixed payment, and hopefully you're going to get what you predicted they were going to get in terms of production and savings. But in this world, basically, a third party owns the project, right? They own the assets, and they're contracted to manage that asset. And depending on how you structure the agreement, there might be production guarantees. So there's one benefit, right? The other thing about TPOs is that basically, you know, if there are complications with the way a company is structured and they don't want or can't take all the incentives, then guess what? That third party owned company will. And that third party owned company could be a finance company, or it could be basically the equipment manufacturer. So if you put this type of panel on it, they have a fund that basically says, we're going to produce X amount of solar panels and we have to sell X amount of solar panels. Some are going to go through distribution, some is going to go through direct, and then some are going to actually be their projects. You see this all the time, right? If you're on LinkedIn and you're tracking renewable energy, this project was sponsored by this company, right? And essentially it's going to benefit the end user who is this company, right? So that's how the TPO works.
Amazing. Yeah, it's almost like replacing the utility company in a sense, in a more decentralized way.
Yeah, I mean, this is where, the targets are folks in certain geographics where the
Mhm.
grid won't be able to take solar, and that you don't want to complicate it through a third-party developer. You want to actually work directly with the manufacturer, the sponsor for that plant, because they got to work out the transmission, distribution, very complex projects. So that would be one type of client that wants that, right? A company that's completely dependent upon, or does not want to be completely dependent upon the utility, and create this type of kind of local power plant.
Nice. So it's more a geographical consideration rather than a vertical or an industry that tends to pursue that route.
Well, that's the geographic one that stands out to me. I think we're going to talk about the other verticals, though. What I've seen here that are super easy are the ones that um, have fairly large size roofs or parking lots that are more of the blue collar side of the world. So auto centers, garages, and service centers for autos. I've seen multiple restaurants, work this vehicle in terms of a kind of a conglomerate or co-op. Um, Medical centers, I've seen a lot in the medical center world, especially the bigger medical centers. Um, there's a bunch all over California I can think of right now, some of which I've worked on. So yeah, the benefit, of course, with this is that if you're so focused in running your medical center, right, or your garage or your auto center, do you really have a facility manager? Probably not, right? And Don's smiling no, because I'm going to open the door wide open for Don here in about 5 minutes. So what the benefit here is, it's just set it and forget it, right? Who's the facility manager? Your facility manager is now going to be the person who's running the TPO, your account manager, right? How
Awesome.
cool is that? And
Really
in
cool.
many areas, and I know this was brought up at a recent previous call too. I mean, a lot of the things here will have batteries. They have to. We're going to be in an era of quicker than you'll ever see, I believe, and having been in here for 20 years, where the battery is going to have to be part of the system. And one of the cool things about the PPAs is that batteries take a little bit more maintenance than a panel, right? And being able to not just make sure that they're working properly, but they're programmed correctly to maximize the non-grid dependent energy in return. Yep.
Cool. Yeah, makes perfect sense and great prediction there too. So what's your pro tip, right? How do we approach these on Surge?
I think we should do a deep dive with our PPA partners. And I think that should be one of our additions. But if you just think about that structure, think of somebody who just does not want to deal with this system after it is sold and operational, then that's probably the pro tip.
Nice. Hands off, much more hands off. Yeah, that makes sense. All right, well, let's move along here to the CPACE program because I
Sure,
know
if you don't
you want
mind,
to
I'm
do.
going to share the screen now. All right, we're getting some questions and comments too.
Yeah, we
Okay,
get some
we'll
great
build those
questions.
up here. We only got two more categories to go. All right, so hopefully you can see this. Please confirm Department of Energy.
Yep,
Everybody
awesome.
can see it? Good. So let's define it first, and I'm just going to take you through this, Al, if you don't mind. We won't do the questions and answers until I'm done. You can ask me, just so that everybody can land themselves on it. It's one of the less familiar vehicles that are out there, but one I'm personally bullish on, and we will be adding some partners in here to the platform more than sooner than later. So what is commercial property assessed clean energy? Well, it's a tool that can finance energy efficiency and renewable energy improvements on commercial property. I know I read that fast, but here's the one thing that I love about this. And finance energy efficiency and renewable energy improvements. Yes, Don, I'm looking at you, sir. Right? This is where you're able to bundle an energy efficiency and energy management system, maybe certain structural things that need to be fixed, like windows, right? Ventilation, right? Even doors. in some cases, fans, right? With the solar energy and battery system. Wow, how can you do that? Right? Well, basically in the other vehicles, you had to have some kind of lien on either the equipment or, you had to have some kind of, guarantee in terms of the loan docs and loan arrangement. But this vehicle is pretty cool because it is built around tax assessment. So basically, when we all pay our taxes, we know I have a couple of properties, you have to pay your taxes, and it lists assessments, right? Schools, police, a bond, something like that, right? So for the customer, the financing for this ends up being part of their tax strategy, right? Wow, that's cool. And because it's part of their tax strategy, and because it is connected to the facility, you can have more products that you can attach it to. And I'm going to get to the downside. Only the downside is that it's not available everywhere. But when you look this up and you study it, all you have to do is look up which areas are being served and focus on those if I'm a sales developer. It's a cool sale, right? Because now you're talking about the entire ecosystem. This is where if you tuned in with Don, I don't know, a couple of weeks ago, right? He's talking about energy management systems. Start there. Okay, well, that's included. Okay, what do we need to fix? The life raft is sinking. There's a hole, and then the engine doesn't work. Which one are you going to fix first? You fix the hole. So let's fix all the broken windows, right? Then we're going to put some energy on there. Phase 1 is solar. Phase 2 maybe is going to end up being a battery. So how is this funded? How does it work? Well, we'll take you through it here in a second. You can see more than 30 states it's available right now. And how is it structured? So like who made this up? It's been around for a while. It's actually one of the fastest growing vehicles I've seen for commercial. So basically a state says we will adopt a PACE program. We want to see more people put solar up, maybe retrofit their businesses, right? We want to help that drive the economy and results and jobs. So they say, let's do this, right? So there's a decision-making body that needs to be formed. Some states, it's by the state. Somebody's got to manage the program. Is this eligible? If so, okay, great, go, approved. Is this not? Okay, sorry about that, right? How are these projects working? So then you create the guidelines. Each one's different, right? Each state's different. And in fact, not just each state, but each jurisdiction. So after that is all put together, the local governments then join the program, or in some cases, remember, we're at the state level. Now we're going to the local level, right? They either just say, okay, let's just do it as we see it. Or in some cases, they go back up to the state level and say, we're going to revise this and have to get that approved. Depends on how the state's structured, county, then local. Hopefully you all follow me, seeing heads nodding in the right direction. So when the project's approved, say you're developing a project, maybe it's a library, a church, right? It gets approved. Then the tax assessment's placed on the property. That's when the financier, and this can be done through public funds, or it can be done through private funds, or both, says, I will underwrite that project. Okay, cool. And then the contractor completes the building improvement. Property owner pays for the work via property tax assessment. And then those repayments are going back to the lender that funded the project. Pretty awesome stuff. This is nothing that you can learn quickly. But I tell you what, the structure of these programs, and this is highly regulated. It didn't used to be. So some people might have heard of this and had kind of a bad taste in their mouth. I'm just calling it out because I didn't sell it for a long time because of that. But now that it's highly regulated, it's kind of hard to get it wrong. Sure, it's complicated, but it's like fixing your car back in the day. Open up the book. Back then, we didn't have iPads, Austin. I actually sat in the garage with my dad, 69 Alpha, open up the manual. What's wrong with this thing? Turn the pages. That's exactly how this works. right? But now we do have iPads. Now we do have the web. So a lot of this is automated. Let me show you a couple more things here, and then we're going to take your questions to me, Ali, and we'll finish up with special financing vehicles. So you can see that there are a couple of examples of projects that are done. So this will get you a feel for industry and application. So in this case, this project was for a retrofit of a historic pier headquarters in San Francisco. If you've been to San Francisco and you know Pier 1, that's a PACE project. Why wouldn't you go down to Pier 1 or 45, I think is my favorite. But anyway, look at this, 32% saves $100,000 annually. Pretty cool. Milwaukee did a library. In fact, I have the case study from Milwaukee right here. Milwaukee has solar? Get out of here. They're the last ranked, Wisconsin was the last ranked solar state last year. But you can see here, the savings, 2.5% there, plus about 17,000 total per year. It's not bad for a library. I didn't realize libraries use that much electricity in Milwaukee. Here's another one down here. Energy efficiency, microgrid improvements for a mixed-use building. $1 million project. Here's another one, two funds, 40 million seismic and energy efficiency retrofit. This one didn't have solar on it. Oh, wait, you don't have to have solar, no? All they need is an EMS and more, a construction related, not just energy related, then you can do that too. Whoa, get out of here, right? Omaha's Blackstone Hotel, right? Hopefully that is helpful to you as a primer. We are going to bring a couple of these folks that are listed in PACE Nation on. You can see already $30 billion economic impact, $15 billion through PACE. And you can see some of these lenders down here. You might be familiar with Home Run, Renew. The one that we have down here in where I'm at right now is Forbright. So you can see there are a lot of banks that, and private equity and private firms that really focus on just this type of project. Did I leave you with any questions, Ali?
Brilliant. No, I think you covered all the bases. I guess, you mentioned something around how it used to be very unregulated. What were the challenges at that time and how has it changed since then in terms of the regulations in place? How does that make it more secure, better option for people?
Yeah, that's a great question. So a lot of the times in the past, the administrators and the fund managers weren't as regulated. There wasn't a lot of oversight. So people were creating proposals that weren't properly calibrated. So they might be overstating the savings or they might be misarchitecting the system, right? And so in many cases, people put a halt to that. A lot of it had to do with not properly selling things, not properly engineering things. So a year down, 2 years down, that's not what we asked for. That's not performing the way it is. So there's a much higher scrutiny on the sales side. Some cases you need a special license. There's also much higher scrutiny on the EPC side. Yep.
Interesting. So for people who are going out, trying to find projects, trying to find leads, have those conversations, when would it be a good opportunity to mention this as an option of how to actually get the solar on the roof?
I do it the opposite way. In fact, I would look to see where the PACE is available, right? And then I would look at the case studies and I'd pitch the case study. Right? Are you a library? Hey, check this out. What Milwaukee did. Churches are really big on this because they would rather have the payment be on the tax side than on not being able to collect the ITC for local incentives, right?
Right.
Churches, nonprofits, those are the ones I'm targeting. Churches, nonprofits, the government, those type of clients.
Right, makes perfect sense. Yeah, no ITC, go for the PACE, makes sense. Cool.
So you have it, 30-minute primer on financing in commercial.
Yeah, absolutely. Well, let's just touch on those last few really briefly, kind of the special options, crowdsourcing, grants, awards. What do those look like?
Yeah, so some folks say, we're going to crowdsource a project. And that means that, a company says, we're going to put solar panels on a roof. And so then they raise the money on their own, or they have employees contribute and, other partners. So that's one way you can finance it. I've known a couple people to do that. There are grants and awards that are out there as well. Perfect examples, the thing we talked about with agriculture a couple episodes ago. In terms of pilot, once in a while, you'll see manufacturers and developers say, we want to try out this new battery, or we want to put a bunch of these new panels that have been developed, or this new technology, who's interested, right? And so all you have to do is apply for that. Those are mostly one-offs. I just needed to put that in there for good form. Make sure we had that fifth column.
Yeah, makes sense. Yeah, and USDA grants are huge right now. So we talked about a few weeks ago, and I know there's other ones out there, and so many opportunities to creatively finance these projects. I'm glad that we went into depth here today, because I think a lot of people don't realize how many options there really are.
Well, it's been a pleasure and honor to serve as always. Looking forward to the next edition. Before we stop the recording, any final thoughts, Allie? And then we're going to open it up to the VIPs.
Yeah, this was a great deep dive. Thank you so much for sharing this knowledge and really educating us on all of the options. Super excited for next week's episode. It's going to be a deep dive on the man himself, Emmett Summers, and his experience in the industry over many, many years. So really fun episode, conversational, a little more social. I'm excited for everybody to really hear Emmett's lessons from his many years in the industry on all topics, right? So this is completely unfiltered. Bring your questions, bring anything you want to know about Emmett and his journey. We're really excited for that. And I'm excited to see everyone there next week.
Well, thanks for joining, folks. And please stay on, stop the recording, and open it up to the VIPs.